The bond market is signaling that reflation could be on the way in Canada. Could that be because the Bank of Canada is about to make a mistake and start cutting? Or is it just because inflation is going up because we're seeing soaring commodity prices right now? So let's get into it. Let's first of all start off with rent inflation. Then we'll get into the Bank of Canada's numbers here. So basically, rent inflation holding steady, as you can see there. If you look at import prices, similar thing. Like, you had this massive surge 2021, 2022, and they've pretty much done nothing. You've seen no easing. In fact, import prices now are very similar to the peak that they were at in 2022, which is incredibly interesting because obviously if inflation is low, then what that means is somebody is eating that cost, and it's most likely the margins of the business. And that's why you see skyrocketing amount of business bankruptcies and people getting laid off, and the economy overall weakening because somebody is going to absorb that cost, even if it's a business that is going bust. So anyway, let's get into this. So Bank of Canada maintains policy rate, continues quantitative tightening. It took me a while to actually find out what was going on. I ended up going to the Bank of Canada's website directly because there was so much fluff about this rate announcement and rate cuts. Anybody would think that they literally said that they were going to start cutting rates later this year, but when you actually get into the announcement, they didn't mention that at all. And what they actually say is what I would expect the opposite of that. So based on the outlook, Governing Council decided to hold the policy rate at 5% and to continue to normalize the bank's balance sheet, QT essentially. While inflation is still too high and risks remain, CPI and core inflation have eased further in recent months. The council will be looking for evidence that that downward momentum is sustained. Governing Council is particularly watching the evolution of core inflation and continues to focus on the balance between demand and supply in the economy, inflation expectations, wage growth, and corporate pricing behavior. The bank remains resolute in its commitment to restoring price stability. Okay, so with everything else that's going on and this inflation going up, I want to go and talk about oil and what's going on with gasoline because very interesting right now. We have seen since December of 2023, we've seen a price move of near 30% in the price of oil. So oil is going up to basically 2023 highs right now. And you've also got it around what it was at in late 2022 as well. And unlike what happened last year, where you didn't actually see this happen with gasoline futures as much, but this year, complete opposite. So you are seeing gasoline futures that are reigniting, and they are up a massive 44%, so much higher. So gasoline prices are up substantial amounts. This is wholesale prices, so forget your carbon taxes. They're all on top of this price that we're paying. So, it's up 44% since the low in both 2022 and also in 2023. And you're going to those highs. If you break out of this range, we could be going a lot higher. And that might be why bond yields are starting to rise. So we're going to go across the curve now because I think it's interesting and I'll try and explain as I go here. The 1 year, this you would expect to change if more rate hikes were anticipated to be on the way. It could easily go up to 5% with the rates right now at 5%, but it's holding steady, pretty much flat. The interesting thing though is when you go to the 2 year, which we'll get onto in the chart in a minute, that is up from around a low of 3.78%. So if we go back to the chart here and we go to the 2 year yield, you can see the 2 year yield here from the low is up 21%, right? So it's only got to go up another 23% ish, and you're going to get to the high that it was at before. So the 2 year is interesting because basically what that could be signaling is this inflation or reflation that we're going to see, because we have inflation right now. We don't have deflation. We just have disinflation, which essentially, as you guys know, is just prices going up. They're just going up at a slower pace than they were last year and the year before that. But what's interesting is when you look at these yields, they are what I have more faith in. I don't really care about what the Bank of Canada says or thinks, because what they normally say is completely wrong to what actually happens. And we're seeing that play out right now. So you've got that is up substantially. And then you've, of course, got the 5-year yield, which is what everybody watches in the housing market because they use it as at least a base and a floor level for rates on the 5-year fixed mortgage, which is the most popular mortgage in Canada, is up around 22% as well. So you've seen bond yields that have surged substantially. And I just want to highlight that this is more nuanced than you actually think when it comes to inflation, because you would believe that inflation is actually much lower than it is in certain places like Alberta, for instance, where inflation has turned up again, and you've got inflation now that's around 4.2%. You've had this sustained increase, and bear in mind it was at 3.4% in January, and if you look at Canada's inflation rate in January, it was at 2.9%. So over 40% more inflation in Alberta, and we know in particular that Calgary's inflation rate is topping the nation along with Alberta's inflation rate. And you know, I've said this many times, you know, there is a big facade that is going on right now in Alberta in terms of the housing market, making it look better than it actually is, and a lot of people who've moved in, and that is sort of distorting the economy in a way, making it look better than it actually is. Alberta is suffering tremendously, just like everywhere, just like we went through with the food bank usage. You know, it doesn't change. In fact, Alberta is one of the worst culprits. So when you actually look at what's going on, it's not that great at all. You know, Alberta was one of the biggest recipients of government stimulus, both provincial and federal stimulus during the pandemic. In fact, the recent premier that got elected has just continued on that path of more and more stimulus, just trying to buy votes. I mean, all these politicians now just seem to be populists and will literally do whatever it takes to buy votes and just print money essentially into the economy, and then they wonder why inflation is so much higher. But that is literally what's happening, as you can see here. And since then, you've had this new report that's come out that says that we're at 4.2%. So, you know, if the Bank of Canada were to start cutting rates, even if the consumer price index gets down, what is going to happen for places like Alberta? I mean, you've got the consumer price index that is falling, and most of the reason why it's falling is because of what's happened with oil prices. We've seen this time and time again, guys, where they say it's because of gasoline prices, it's because of oil prices, and now you've got oil prices and gasoline prices continue to go up. So it's going to be interesting to see what happens. You know, in my opinion, what I think is going to happen, and I will probably be wrong on this, you know, I can't predict the future just like most of you guys, but I'm just literally going to use probabilities. I think the government will continue to do stimulus. I, in fact, think there is more stimulus that is coming down the pipe, and I think that's what the bond yields are probably predicting. I think that we'll see some sort of event, and I think that that will hit and impact people massively, because the thing is, when businesses' margins are shrinking and more people are getting laid off, and you've got inflation coming down as a result of demand coming down because the economy is so weak, at some time rubber is going to meet the road, and you're going to see deflation really start to set in. And then the bank's knee-jerk reaction to that is going to be to cut rates, and then that might just let inflation rip. We're already seeing the bank's virtue signaling, and the bank, I mean the Bank of Canada, coming out and basically sending the loonie tanking right now. And that is incredibly sensitive to things like food and energy prices. So when the loonie goes down, you see all the grocery store chains adjust their prices up in the grocery store. But of course, what happens? Do they ever put them down if it comes back down? No, they don't. You just see that happen one-way street. That's definitely what we've seen. So we'll continue to monitor what happens, guys. If you've enjoyed this video, I would highly recommend that you check out this video here. If you're looking for a VPN to get around the censorship laws in Canada, go to expressvpn.com/marketmania. I will see you in the next one.